Welcome to BTV Chinese channel. You're watching our special National Day program. Today, we're dedicating an entire episode to talk about Solana. In the past, it was known for frequent crashes, and things got even worse when FTX collapsed in 2022. It almost took Solana down with it. It nearly cost Solana half its life, but surprisingly, not only did Solana survive, it managed to uphold its reputation thanks to 4 major technological breakthroughs. For example, with technologies like POH timestamping, Tower BFT consensus, turbine sharding for data transmission, and sea-level parallel execution, Solana has pushed the industry to new heights. You might have noticed that when minting, Solana is clearly much faster than Binance Smart Chain, and it doesn't have the same airs. It's relatively fair. Thanks to these advantages, Solana transformed in 2024 into one of the most active ecosystems for developers, and now even Wall Street Capital has its eyes on it. Today, we're going to break down how Solana went from being a rising star, plummeted to rock bottom, and then made a comeback to become a favorite among both investors and developers. Back in 2017, Anatoly Yakovenko, a former Qualcomm engineer, released a white paper called Proof of History. As you know, a white paper outlines what problems a blockchain or public chain aims to solve. Yakovenko was targeting the old issues of legacy blockchains being slow and expensive. As you know, these are almost exactly the same problems that Ethereum is trying to solve. So, over the years, every white paper aiming to tackle the issues of high cost and slow speed has been seen as a competitor to Ethereum. That's why Yakovenko gathered a few colleagues to start a new venture. Initially, they named it Loom, but after realizing there was a name conflict, they changed it to Solana. So Solana's core competitiveness comes from the stack of the 4 cutting-edge technologies we just mentioned, which allows... It took a unique path right from the beginning.
First, there's the Proof of History, POH. Historically, it's like giving every transaction an ID card before they can be traded. In the past, blockchains would gather a group of people for a meeting, and everyone would compete to speak first, which was highly inefficient. The role of POH is to unify the order, arranging transactions along a timeline and eliminating disputes. Second, there's the Tor BFT consensus mechanism, which works hand in hand with POH. POH handles the queuing, while Tor BFT is responsible for quickly confirming orders. The result is that Solana's block time is only 400 milliseconds, which is an order of magnitude faster than Ethereum's 12 seconds. Third, there's the turbine protocol, which is like breaking a large file into small pieces for direct transmission. Sending a video in one go would lag, but Turbine slices it up, allowing nodes to share the workload and deliver the data, greatly improving transmission efficiency. Fourth, there's sea-level parallel execution. Ethereum is like a single-lane road where all transactions have to queue up, but Solana built a multi-lane highway, so non-conflicting transactions can be processed simultaneously. Theoretically, its TPS can reach 50,000 to 70,000, which is several orders of magnitude faster than Bitcoin 7 or Ethereum's 15.
Search. From the outset, Solana's goal was straightforward: to create a blockchain that would be as seamless as using WeChat or a credit card with negligible fees. Many people initially thought this was hypnotic, but during early testing in 2018, it achieved tens of thousands of transactions per second, shocking the entire industry. We now understand Solana's rapid success. Next, let's examine its development history, which is truly more captivating than a TV series. From obscure, unknown entity to a rising star in traffic, from the FTS's quagmire to its resurgence, each stage feels like a script change. Investors can't stand the fact that the entire industry is clinging to the old habits. The first stage is the obscure startup period, which was from 2017 to 2019. At that time, Solana in Nevada was still in the dark. The core team was figuring out how to build a test network and how to run this technology. In 2018, it won a multi-million-dollar round of financing. In 2019, it received a $20 million round of financing led by Multicoin Capital. At this time, it had just gained some fame in the industry. However, at that time, no one paid attention to new technologies. Everyone was tracking Bitcoin and Ethereum. Solana was destined to remain a small player that no one cared about.
From 2020 to 2021 was Solana's highlight period when it truly rose to the top. In 2020, its mainnet went live, coinciding perfectly with Ethereum's period of sky-high gas fees. At that time, the transaction fee for a small transfer on Ethereum could be higher than the principal itself. Users and developers were willing to migrate to Solana, where they could enjoy high concurrency and TPS for just a few cents in fees. Even more crucially, Solana gained the backing of FTX founder Sam Bankman-Fried. FTX and Alameda not only invested heavily, but also promoted ecosystem applications like Serum, directly making Solana the focus of both capital and narrative.
The year 2021 was a turning point. Solana's price skyrocketed from just a few dollars to nearly $260. Ecosystem projects began to spring up like mushrooms after the rain. The NFT platform Magic Eden even briefly overshadowed Ethereum's OpenSea. The market atmosphere was almost frenzied. Nearly everyone was saying Solana would replace Ethereum. But no one could have predicted that at the end of 2022, FTX would suddenly collapse, exposing a financial black hole and a slew of scandals all at once.
In 2022, Zen Bankman-Fried fell from a major player to a nobody. Solana, due to its excessive ties with FTX, suffered a heavy blow. SOL plummeted from over $200 to single digits. Ecosystem projects failed. Applications like Oxygen and Maps.me, relying on FTX and SOL, shut down. Developers left, Solana's reputation suffered, and the market consensus was pessimistic. Solana is dead.
At that time, Solana was like a runaway bus speeding from the mountaintop straight down to the valley, fast and unstoppable. But Solana didn't collapse completely. It managed to save itself through three key steps. First, it pushed for decentralization, promoting distributed validation and introducing Jump Crypto's Firedancer client to enhance its resilience against outages. Second, it lowered the barrier for users by embedding transaction entry points into web pages, QR codes, and social applications through blinks and actions. Third, it rebuilt its ecosystem, gradually regaining the trust of users and developers who returned to the platform. As a result, in the first quarter of 2025, Solana achieved zero downtime, finally shedding its reputation as the network that always crashes. Looking back, all of this once seemed unimaginable.
According to the Electric Capital report, in 2024, Solana gained 7,625 new developers over the year, an 83% year-on-year increase, making it the ecosystem with the most new developers. The return of developers has driven the real-world adoption of stablecoins and everyday payments.
You have to understand that having developers means new projects will be born on this chain, which in turn drives the use of stablecoins on this blockchain for everyday transactions. That's why the volume of stablecoin transfers on Solana has also started to increase. In January 2024, it broke through $300 billion for the first time. And in 2025, it is still fluctuating at a high level. At the very least, this shows that users are starting to use Solana with real money, not just speculating on coins anymore. So now, Solana can truly be said to be making a strong comeback.
Actually, it's a Solana project called DeFi DevCore for DFTV, which we're very excited about because Solana has always been a very big deal for us as a firm, and it's our largest actively managed.
In addition to its overall development, the progress of the Solana ecosystem has also been very remarkable. In its early days, it relied almost entirely on NFTs and DeFi, with applications following a very singular and highly uniform model. Looking back at 2021 and 2022, Solana's DeFi was basically just a reskin of what was happening on Ethereum, just copy-paste, and that was it. Solana's lending protocols were the same, the only real advantages were speed and low cost. But after the FTX collapse in 2023, with developers returning and capital refocusing, Solana truly began to move away from simply copying others and started exploring differentiated innovation. If you look at it now, from financial derivatives to government bond issuance to on-chain liquidity optimization, all of these are transforming Solana from an Ethereum alternative into a laboratory for new financial experiments. Solana is trying to find a new balance between institutional and retail demand.
For example, Camino launched an interest rate swap protocol. If you earn interest with GSOL but are worried about rates dropping, you can swap between fixed and floating rates, essentially putting insurance on your yield. In just its first week online, trading volume exceeded $1 billion. Another example is Maple Finance, which tokenized US Treasury bonds and brought them onto the Solana chain. Users don't need to open a brokerage account, they just buy the token to earn about 4% annualized returns and can sell at any time, offering much greater liquidity. These kinds of applications have attracted a lot of institutional capital, marking that Solana is no longer just a retail investor's playground, but is starting to gain the attention of Wall Street.
Another crucial driver behind Solana's rise is NFTs. Back in 2021, everyone knew that the NFT craze on Solana was almost entirely short-term speculation, sketchy projects and monkey profile pictures where you'd buy at 100 today and sell at 200 tomorrow with little real utility. Especially after the FTX collapse, Solana's NFT scene nearly went to zero, plunging the ecosystem into a deep freeze. But after 2023, things changed. Solana's NFTs gradually started shifting from being air assets to becoming ecosystem assets. Some projects began experimenting with governance mechanisms, some turned their IP into operational brands, and others explored combining the virtual and real worlds, turning NFTs into membership cards, tickets, or vouchers for food and services. As these new models proved themselves, NFTs stopped being just speculative tools and became a sustainable, profitable value proposition that could be integrated into the consumer, entertainment, and IP industry chain.
For example, Bunk was originally just a meme coin but has now transformed into Dog, where holders can vote to decide the direction of IP licensing, such as collaborating with streetwear brands or gaming companies, and sharing the profits with holders. There are also some NFT projects that combine the virtual and real worlds, serving both as tickets to the metaverse and as vouchers redeemable for real-world products, creating two-way value. This kind of transformation shows that Solana NFTs are evolving from short-term investment products into long-term, usable digital assets.
If you look at the current Solana ecosystem, it's no longer just about NFTs or DeFi, it's starting to develop in multiple directions. For example, in the gaming sector, what were blockchain games like before? They were basically financial products disguised as blockchain games, just swapping bottles for old wine. Now with Solana's high TPS and low latency, it's starting to enable real-time battles, and in-game equipment can be freely traded on-chain. These are gameplay experiences that actually matter to users. In terms of payments, Solana is partnering with platforms like Spotify to allow merchants to receive payments with zero transaction fees. For cross-border e-commerce, there are benefits as well. In social applications with products like Blink and Action, users can initiate transactions directly in QR code web pages or social circles. All these changes show that Solana is moving from a hype-driven ecosystem to a utility-driven one, gradually building a more grounded and commercially viable blockchain network.
This year, Solana's price movement has been a roller coaster. Early in the year, it hovered between $95 and $110. In March, after the successful Inferno Duster test, record stablecoin transfers, and Galaxy Digital's buying spree, the price surged to $180. In Q2, with Fed rate cut expectations, it broke $250. However, due to Ethereum's issues and upgrades, it fell back to the $180–200 range. In the second half, with continued accumulation by Pantera and Summer Capital, plus zero-knowledge tech support, Solana returned to $230 in September, then climbed to $300. Throughout the year, driven by institutional bottom fishing and ecosystem growth, the price pattern was set, aiming to challenge $260–320 highs by year-end.
Over the past 2 years, Solana has moved very quickly and rebounded sharply, but technical risks still remain. The most typical issue is storage pressure. Because transaction speeds are high, the network's data expands extremely fast. Running a full archival node for a year consumes at least several hundred terabytes of storage space, which ordinary people simply can't afford. Only large institutions can operate them. This in turn invisibly increases the risk of centralization. The official solution is to introduce a modular structure, outsourcing historical data to specialized storage networks. However, this is still in the exploratory stage, and it's uncertain whether it can be implemented. Looking further ahead, there's the risk posed by quantum computers. Google and IBM are both ramping up their research and development. If quantum computing breaks through current barriers, existing blockchain networks could potentially be compromised by quantum attacks. Therefore, Solana must proactively consider how to achieve quantum resistance. Otherwise, it will once again be at a disadvantage in future technology races.
Solana's competitive environment is also changing rapidly. After Ethereum's Cancun upgrade, blob transactions were introduced, and the cost of rollups dropped directly by 80% to 90%, making it much more cost-effective for developers to build applications within the Ethereum ecosystem. Many teams that were originally considering switching to Solana are now returning to Ethereum. At the same time, new public chain teams like Sui and Aptos, which originated from Facebook's Diem project, are backed by top-tier capital such as A16Z and Jump. They have introduced innovations in transaction processing and programming models. Although their scale can't yet match Solana's, they've already attracted a portion of developers. If Solana doesn't come up with compelling new moves soon, its first-mover advantage may be eroded.
Although there are quite a few challenges, the attitude of the capital markets speaks volumes. Solana's recent rebound isn't just driven by retail investor sentiment. Institutions are entering the market in large volumes, and they're doing so with a long-term allocation mindset, not short-term speculation.
Galaxy Digital bought 6.5 million SOL in just 5 days, which is about $150 million. Modcoin Capital and JaCrypto also participated in Forward Industries Series A round, investing $16. After the $150 million private placement, Forward announced it would shift its strategic focus to the Solana treasury and has already purchased 6.8 million SOL, planning to hold them long-term and use them for staking. During the same period, Nasdaq-listed company Helios Medical Technologies also announced a $150 million private placement to establish a dedicated Solana finance division, with Pantera and Summer Capital leading. Over the next 2 years, they will continue to increase holdings and participate in staking and lending. In addition, Sharps Technology holds 2.14 million SOL, and DeFi Development Orb owns 2.1 million SOL. This wave of institutional buying shows that Solana is no longer just a conceptual chain, but is now being treated as a strategic asset allocation.
I feel good about the situation, although there are some regrets. But I think these issues have all been resolved. I believe we will implement the Pantera Act by the end of this year. I think we will have the Solana Finance Division by January 1st,
Many institutions are predicting that in the future, if Solana, SOL, breaks above $400, it should do so easily and without much resistance. This data conveys two core signals. First, institutions are putting real money into Solana, not just talking about it. There are already 16 institutions starting to allocate to Solana. Second, their approach is long-term oriented, not short-term trading, which means Solana's positioning is shifting from a narrative chain to an infrastructure chain. Its advantages lie in high performance and low fees. And as development gradually recovers, applications are becoming more grounded. For example, Blinks lowers the entry barrier and enables games and payments to be quickly implemented. However, at the same time, storage pressure, concerns about centralization, and the risk of outages remain hidden dangers for Solana. As an investor, how would you assess these risks and allocate your Solana holdings? Feel free to discuss in the comments section.